This is a Stock Trading Reality Podcast, episode 80.
I was actually religiously making sure I was prepared for every single trade I would get in.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host.
He prefers sprinkles on his donuts,
Claytrader.
So yes, I do enjoy sprinkles on my donuts. That would be my favorite topping. But today I'm a little irritated, so we're not even going to talk about donuts or anything. And I already shared this with Ches a little bit, but he had no idea that I'm going to go on a little mini rant here. But as of today, when this airs, it'll be weeks from now. But today I put together my thoughts and did a review on binary options. So we'll link that video in the show notes. But I'm still a little irritated by that, because Ches told me a while ago how binary options worked, and I'm just like, oh man, that's really sucky. And not that I don't trust our esteemed co-host Ches, but it's just like, are you sure, man? Because that sounds really bad. Like what you're describing, how can they even be in business? Because that sounds really, really bad. And then today, and I've been doing a little bit of other research so I can do just a review video on how they work and all that sort of good stuff. They really are as crappy as Ches is talking about. So, Ches, they're like the worst thing. Like, I'm honestly still annoyed by how bad binary options are. And you see it all the time. People, hey, I'm thinking about doing binary options. What do you think about them? I've been doing them. Just gambling on steroids.
It's gambling on steroids with the odds actually never, ever in your favor. It's the equivalent of flipping a coin. If you're right about heads or tails, you make less than you would lose if you're wrong. And that's over and over. And it's literally as simple as it's skewed risk versus reward the wrong way. Like there is no advantage. There's no long-term way to kind of do that. And it just kind of blows my mind. I was like, okay, you're gonna quote unquote bet on a 5-minute direction for this. And I'm just like, I get it. You could totally use technical analysis. But you've really limited. It's gambling. It's as simple as that. It really is gambling, and it drives me nuts. And I'm glad you finally took my advice and looked into it. I'm going to be a whistleblower here. Clay actually launched this website with his binary options profits. He just hit it big, and that's what actually launched this website.
It's true. It's where my whole trading account came from, was binary. No, and what dawned on me is when you think about who pays you. And so if you sign up with a traditional broker, E-Trade, Scottrade, Merrill Lynch, Charles Schwab, any of those brokers out there, Trade King, you get paid from the market itself. Now, sure, the broker will take that money and transfer it to you, but it's not coming from the broker. That's not it's not costing them any money to send you that money, because you are paid from the markets itself. But in binary options, the people that are paying you are the brokers itself, which tells you what? Well, if they have to pay you, then that means that it's coming out of their pocket. So does that sound like anything? That I don't know about you, Ches, but that sounds kind of like a casino, maybe.
Yeah, it sounds like you versus the house.
Yeah. So that as soon as I realized that, it's like, okay, this is gambling, because if the brokers are paying you, if they're the ones that have to pay out, then of course they're going to need to skew things in their favor. They're not stupid business, people. They're going to put the odds in their favor, just like the casino does. So, if you don't believe anything else about, binary options being straight up gambling, then just remember who is actually paying you. It's not coming from the market. It's coming from that particular broker. And that broker, they're not going to just be, we'll just see what happens 50-50. No, it's going to just watch the video. I'm done. We got to get to this interview, Ches. So today we were talking with Parker. He's been a long time member of the community, and it's easy in the chat room. He just simply goes by Parker. And he is now a full-time trader. Didn't exactly start off smooth for him, as we'll see, but definitely a good kind of journey from very rough waters to now, the waters of being a full-time trader. So and I promise I think I'm calmer during the interview, but right now, yeah, my blood is boiling. So stay away from binary options, but hey, let's talk to Parker. Hey, Parker, welcome to the show.
Hey, Clay, how's it going?
Good. I was kidding with Parker a little bit beforehand. For those of you in the community, I'm assuming you associate Parker with kind of the same association I have. And that is the guy that's always posting charts, with his annotations and stuff. And he's kind of, I don't know, that's the reputation that I, associate with him. So before we got started with this, I just was jokingly, hey, do you need to post any charts or anything before I get started? And I got to actually get a Twitter one posted real quick. And I'm looking in the chat room right now, and there is Twitter. So well done, Parker. Looking like you got all sorts of good annotations on there. But Parker is definitely our kind of chart guy in terms of post. I'm trying to think, Ches, does anybody else really even post charts besides Parker? Maybe a couple other people, but nobody as religiously as Parker.
Nobody as religiously as Parker. I'm not going to lie, Parker. The first impression I got from you is that you were a perma bear in all your charts, but then again, honestly, you're just a really good technical analyst. So, Parker posts a bunch of good stuff and kind of spurs a lot of good conversation, but he definitely does it the most kind of routinely.
Yeah. So, anyways, we're going to learn all about how he got into charts, I'm sure, as we go down this journey. But he goes by just simply Parker in the chat room for those of you that do hang out in there. So Parker, again, thank you, but let's just start at the start as we always do. And what got you interested in the markets and what got you interested enough to want to actually start to get hands-on and put some of your money into the markets?
Absolutely. So when I was still in school, I actually just graduated in May from UNLV. When I was still in school, I was working a valet job, and one of my roommates would be up at 6:30 every morning, and I was working graveyard saving money. So I kind of got interested because I would get up in the morning. He'd be on the computer. I'm like, "What are you doing, dude?" He's just some college kid. I'm like, So he tells me he's like investing, and I loaded the boat with this dumb stock, and then it just sat there. It was Vringo. One of those
VRNG.
VRNG, yeah.
I remember that one.
Yeah, it had a few runs, some crazy days.
It had a few dumps too, if I remember
yeah,
right.
Exactly. Yeah, some wild swings. So I loaded the boat with that, bag held.
Wait. You're talking. You all of a sudden hopped in the market.
I hopped in the market. I saved every dollar I had in valet, $10,000.
Okay, so let's
5 or so years ago. No, 6 years ago now.
Okay, so you wake up in the morning and your roommate is trading or is investing. Exactly. And at that point you say, I want to get involved, or how long did it take you to actually pique your interest enough? Because then you made the comment that you started to save money. So when you said saving money earlier, did you mean you started saving for trading at that point in time?
Yeah, so basically I saw the opportunity there was in the stock market from my friend who I saw in the mornings, one of my roommates actually.
So was he killing it? What made you see the opportunity?
He was just accumulating, and he told me he made like 20% on some investment, and he put in $4,000, $1,000, and he was like, "Yeah, man. I don't even mess with penny stocks, but I know that you can get crazy returns." So of course, that's kind of what I looked for: some really cheap stock to load the boat with and try and hit a home run.
Gotcha. So it's safe to say that you heard about this, or you saw the stock market from your buddy, and then your buddy told you how great it was, and because he's your buddy, you trusted him, and then he also brought up penny stocks, so that's what kind of led you to penny stocks then? Is that pretty much Absolutely. Kind of a fair sum? Okay.
Correct.
So how long did it take you to actually save up? Did you say $10,000 you saved up?
Yeah, so...
Very nice, yeah. So, a lot of people, Ches, I want to bring you in here. We come across a lot of people, and I don't say this in a bad way, but it's just like, be a little bit more patient, but like, hey, I got like $200 I want to try. Hey, I got like $300. Hey, I got like $50. That's just not quite how you need a little bit more than that, Ches. And you come across quite a few people like that. For context, Ches deals with a lot of the customers, potential customers, I should say. So that's a pretty common theme, isn't it?
Yeah, I have people who say I have $500. I want to make $2,000 a month with it, and I go, let's do a little bit of math here. So you want a 400% return on this, just no problem every single month, and then what? When you make your $2,000, you want to make $8,000 the next time after that, and yeah, they just don't understand that. I deal with a lot of people who generally. They might find the market right away, but don't have any money set aside, or they haven't actually taken the time and the patience to kind of save up for it and practice. So, I run into that every single day.
And the key word there being patience. And so props to you, Parker. You actually, located something. You located an opportunity. But a lot of people locate the quote-unquote opportunity as the market, but then they just rush right in with not enough capital, and they go down a lot of bad holes. Not that if you have money, you're not going to go down bad holes, but at least you saved. So... well done for saving. And How long did you say that it took you to save up the 10 grand, which is quite a bit of money for a college kid?
Yeah, absolutely. Yeah, so I had the opportunity to work valet, so I made pretty much cash tips every night. So I was walking away with $100, usually overnight, and that way, I had no real expenses. $500 for rent or so, $600. I was renting a room in an apartment a few miles away. So it took me about 8 months, 7 or 8 months to save up that 10,000, and then after I took my money out of Ringo.
Well, let's talk about what got you
Claytrader.
interested in Vingro. What got you interested in VRNG though?
Yeah,
'Cause I always like to talk about failed trades, and I feel like this one maybe didn't go so well. So I mean, was this like a message board, social media?
Yeah,
How the heck
actually,
did you stumble across
absolutely.
VRNG?
Yeah. So when I originally was researching stocks, there was some news article I think that was that showed a little company worth whatever possible billions on Google patent troll case. So I looked at it, and then I searched message boards, and I came across iHub, and
There
that's
she
how
is.
the old iHub. That's where I actually found Bull Warrior stocks way back when.
Bull Warrior stocks. That's a long time ago. But yes, iHub.
Yeah.
iHub is just a great place. Don't get me wrong, there are some good folks on there, but they are very few and far between.
Oh,
It's
yeah,
just
that
a
was
lot
a
of
long
people and
time
a lot
ago.
of hype.
I
I
was
don't-
not an experienced investor at all back then. I was just looking for new information, honestly.
Right.
Yeah, and iHub at the end of the day is a tool, and like any tool out there, you can either use it properly or not use it properly, and it kind of takes advantage of you. So yeah, I mean, we don't really have anything against iHub here at all. I mean, it's a great
I was just
tool.
gonna say, I know I sound like I always bash iHub, but that's not the case. It really isn't that bad of a platform, and you could say the same about Yahoo message boards, things like that. It's just you have to understand that it's not the be all end all, and you can't just trust what these strangers are saying on the internet.
Exactly.
Just blindly.
You gotta find where the good content is. You have to search for it.
So VRNG, walk us through that trade. You found it on iHub.
Yeah, I found it on iHub, and I kind of was following their court case day by day. Kind of waiting for these court updates to see whether or not their litigation was going to be worth any money. And yeah, that was pretty much what I was doing for like a year, I think, or maybe 9 months.
Did you hold shares during all that, or
I
was all this?
I kept accumulating shares along that
Okay,
time.
gotcha.
And then
So you
at
not
the
only
end of
bought,
my
you
time,
kept.
it was worth around 10,000. Yeah. So
Okay.
then it was kind of sitting, didn't do much. I ended up actually getting rid of it after not selling for like a 50% profit or something. And so then I was like, okay, I really need to switch up my game plan. So that's when I found your charts that you post YouTube links to back in the day, and that was what really got me started on technical analysis. And ever since then, I've never stopped.
Okay, so you got. Did I hear that right? You made a 50% return on VRNG.
No, I missed out on a 50%
Oh,
return.
you missed out. Okay.
Yeah, exactly.
Okay, I was gonna say, man, you made 50%. For most people that would lead to fool's
Oh
gold.
yeah,
but
absolutely.
All right, but you missed out on 50. So I mean, on the trade overall, was it a break even or make a few bucks? I mean, what?
I think it was like maybe within an $800 profit. Nothing major,
Okay.
maybe 8% or so. But for that amount of time, it was like almost average return on the S&P.
Yeah, exactly. And when you take a step, and a lot of people also fail to do that. They don't take a step back and look at the kind of the overall context of things. And it's like, oh yeah, $800 profit, but for the time, yeah, I mean, you're absolutely right. So you stumble across, the video charts, and I guess props to you also, because I mean, for me, if I'd have made profit, I would have never looked at that. I'd be like, oh, I got it all figured out. But even though you made money, you were still like, there's something not right here, so I need to figure something out. So I think a lot of people, especially in the history, myself included, would just be like, hey, I made a profit, therefore I'm good to go. When the sequence of logic, that's pretty bad. So you realize you need to up your game, as I believe you said. You found the video charts, and I mean, where did you really go from there then at that point?
Yeah, so from there, I actually I started getting involved with pennies, and I was just trying to day trade and swing trade penny stocks. All those Q runners back in the day, and all those different just crazy weed stocks and everything when when litigation was becoming legal in those two states. I tried to make some money. I actually did make quite a good amount on those. I made like $5,000 in like 2 weeks from just accumulating weed stocks, and I got really lucky that at the time they just blew up. But that was the worst thing that ever happened to me, and or maybe the worst and the best, because I learned so much from it. After I made a sizable amount, basically getting lucky.
I love how you keep emphasizing the word lucky. I love that, because you fully realize that the whole pot stock boom. Yeah.
Oh, complete luck. Yeah. Yep. There's no way that anyone can be ready for that unless you're friends with the governor in Washington or something.
Exactly.
So I made a bunch of money on that, like $5,000, I think it was, off of a $800 investment. I actually purchased a car in between with this money that I was saving. And then so I made a bunch of money, and then I thought I was invincible.
I was just going to go down that route. I was going to say, you got the car, you're about to get the house, you're going to get the mansion, you're going to get the beachfront property.
Right?
I love that, just like Clay said, I love the fact that you kind of said it was probably the best and the worst thing that ever happened to me, because honestly, that was a bubble. I did trade a little bit of it, but I actually did not anywhere near crush it to the point where you did. I actually ended up losing money because I was at the tail end of the bubble. But yeah, now you feel invincible, so let's hear how dark the rabbit hole gets.
Yeah, absolutely. So I had this $5,000 or so, and I just started buying up another stock or day trading stocks, and I was just getting crushed because I was doing all penny stocks again. So I lost all of that investment that I had.
So what was the problem here? I mean, you were buying and they drop, or you were buying and there just wasn't enough liquidity? Because you said you were day trading, but I'm assuming you use that term day trading pretty loosely with what you know now. But I mean, what was your strategy? Just randomness
Absolutely.
Or what?
Yeah. So I wouldn't have my charts drawn up for the day. I would just wake up at 6:29 in the morning, and I would look for, charts from the night before that are getting volume in the morning, these penny stocks. Or I had like a list of like 15 or so for the week. And I would just look for volume. Wherever there was volume, I looked for opportunity, and I would get in and out in the same day usually. But it's really hard to make money day trading penny stocks because they're so volatile. So that's kind of where I started losing that 5,000. So it took me about 2 months, and it was gone. It was completely gone. I had a couple decent trades, but I was going in with 80% account size, 90%. Usually I would never go below 50% of my account value in one trade.
So in other words, your trading philosophy was go big or go home.
Exactly. I wanted that boat. I need that boat now.
Yeah, exactly. It's amazing how you make one trade and that just all that fool's gold comes about. And then all of a sudden it doesn't happen, but it can happen because it's happened to you before. So you get the attitude of let's make it happen. But the whole problem is when you're trying to make it happen, you're doing a lot of dumb stuff, and not you, as in you all, everyone. That's just the way kind of human psychology works. So
absolutely.
Wow, 2 months and it's all gone. And I mean, still though, with the volatility of the penny stocks, I mean, you would buy and then. I mean, if they were volatile, that would imply that they would go up too. So you just weren't quick enough to capture the gains, or did you think that were you being too greedy and they, didn't go up as much as you wanted them to? Because volatility goes both ways, as you know. But so what was holding you back in terms of just not being able to make money?
So basically, at the time, I was only going long. I did not ever short any penny stock. So that was probably another problem because, they go up and down, and if you can't adjust to it, then you're gonna get burned. What was the question you asked me again?
I mean, how volatility? You said they were too volatile. Well, volatility would imply that some of it goes in your favor too, meaning the prices would go up. So why were you not taking advantage of those? When it would go in your favor, was it greed? You were thinking, I think it'll go up a little bit.
It was
more.
Number one problem was greed for sure. I would buy, and it would maybe go up for a few hours, then I would end up holding it to the next day, and then if you hold a penny stock overnight, you're adding a lot of risk to your trade. So that really burned me a couple of times. I lost money again overnight, and a few of those on 50%, 80% account value, and you're pretty much done in 2 weeks or
2 months.
so.
Yeah.
Yeah, 2 months even. Yeah.
Yeah. But so isn't that fascinating, Ches? How, he said he bought, he went long, and then it started to go up in his favor, and it went up. But then he's like, yeah, you know what? I'm going to decide to hold for a day. A lot of times, new traders suffer from just selling too soon, and they do the whole, oh man, if I would have just held, because they're just glad that, hey, I'm actually in a winning trade, so I'm going to make it a winning trade. I'm going to sell right now. But Parker, that's kind of old stuff. Yeah, I've already bet in winning trades. In fact, I turned $800 into $5,000. So he's getting into trades, and he was right. I mean, they're going up in his favor. But now he's kind of a big boy, Ches, right? I mean, I don't want to sell right now. I might as well just keep holding.
No, I'm going to turn this, whatever my account value's at, I want to double that or triple that, or, if it's closing green on the day, then why is it not going to close green or gap up tomorrow? And just like Parker said, these things are notorious for getting slaughtered, after hours or pre-market and just literally gapping down. Like he said, they could get some of these gap down more than 20%. And then anybody holding that bag overnight, or, not even holding the bag, just holding overnight, as you said, it's just super, super risky, especially with these names. And to touch on what you said, volatility really does go both ways.
Yeah. So greed. And it's not like Parker's alone with that. Everybody has a little bit. Everybody's always struggling with greed. I mean, we all want to try to maximize things and make as much as we can. So, anyways, the money is gone. So what happens at this point in your journey? Because you're kind of back to square inch one.
Absolutely. So then I was not involved in the market at all for probably 6 or 8 months. Still going to school. In between then, I actually switched my major from hotel to finance. Hotel management at UNLV. It was such a good program. I couldn't refuse it at first, but then I realized I couldn't work in a hotel all my life. I'd rather, make trading my profession and try and work from home. I think that's really important to be your own boss or at least have an extra source of income. So that's kind of what I tried to run with, and it's been going good so far. I actually quit my job in December, and I've been doing technical analysis and kind of swing trading, day trading a little, trying to have really good entries, and it's been awesome. This is actually my full-time job now, and it's honestly thanks a lot to you guys and the charts and the chat room and everything. Like, I've had so much value over the years. It's really amazing that you can actually become a day trader full-time.
No, yeah, it's definitely the thing that we like to showcase here is first off, congratulations that your hard work has kind of paid off and you've really kind of applied what it's taught. But the whole thing for us though is about kind of that journey of getting there. So there's no way you can tell me that you went from kind of holding penny stocks overnight to becoming able to kind of quit your job and do this full time. What kind of happened between those times where you're getting burnt holding penny stocks overnight to now? What did you have to do to kind of change your trading up? What did that whole gap in between then and now look like?
Absolutely. So from the time I took off, I started saving up some money again, and I started really paper trading.
Hey, there we go.
Yeah, I started paper trading, and I was using only the same amount of money that I was using or that I was planning on investing. I was limiting my position sizes.
Why were you doing that? Why were you using the same amount of money that you on paper trading that you would be using for real money?
Absolutely, because when you're paper trading a $100,000 account and you trade with 10% or 7% of your account value in one trade, 5%, whatever it may be, you're including more emotion when you see a $5,000 position go to $6,000, because you know what I'm saying? It's a different emotion rather than using $300 trade and seeing your account value go up, to $100.
Right. It's a waste of time. And the reason it's a waste of time is, and we see this all the time, and this is not a new theme, but, if a lot of people say, yeah, so I'm setting up this trade simulator and they give me $100,000 to start off with. So that's what I've been trading with, $100,000. And Ches and I will ask the person, well, are you going to have $100,000 when you go live?
Yeah.
No, I'm going to have like $50. Yeah,
exactly.
I'm going to have like $50. Well, then why are you because to Parker, to your point, the emotions, it's not even going to be close. It's going to be a world of difference of, so, and a lot of people, and I'm not saying that's something obvious to do. Now, if you've heard it now and you're listening on, no more excuses. You better go and change your little trade simulator to whatever cash amount you're going to be using. But, and that's what I can never remember. Ches, what does Thinkorswim give start people off with? Is it 100,000?
It's 100,000. Yep.
Yeah, it is 100,000 for sure.
Yeah. So if you're using Thinkorswim, which is a good paper trading platform, you can go in there and change that 100,000 and change it down to whatever you're actually going to be going with in real money, because you're going to be in for, we see it all the time. People are, talking their paper trading. Yeah, I've made, this amount. And then all of a sudden they go to real money, and then it's like crickets. You don't hear from these people anymore. It's like, well, that was probably somebody that was, making $10,000 a day because they were using some $500,000 account. But when they went live, it's a $500 account. So, yeah, very smart. And I'm glad you brought that up, Parker. You did that because that's a small thing, but it makes a huge difference just in terms of keeping your emotions in check, because like Parker was saying, things get way too discombobulated if you're, using, vastly different, amounts. So how long did you paper trade for? You said you were doing that, and it sounds like you're taking it very serious, doing it the right way. So how long did this paper trading last for?
Absolutely. Yeah. I was, waking up really early, having charts ready for the night before, watching pre-market. And I was paper trading for about 3 or 4 months or so. It was probably around 3 months. And among that time, I actually was saving up again, moved back in with my family, and I saved up, I think, 45,000 or 4,500 or $5,000 in the time. And I just went in again, and I actually started respecting my stop loss.
Hey,
which was like groundbreaking for me. If anyone's listening and you don't know what a stop loss is, you have a rough road ahead.
Well said, sir.
But there's nothing wrong with that. It's part of the learning experience. Sometimes you have to feel the rough road in order to really understand the emotion of losing money in a trade.
Now,
sometimes that's what it takes, but it's sad. But that's why you need to. That's really why you need to paper trade and make sure you use the same account value, because if you're at a new job and you get this corner cubicle with no windows by the bathroom and you got a $5 account, it's not going to feel the same as you sitting in, prime time suite location with your own full panoramic window suite in a city of the view of Las Vegas. That's the difference from trading with a $100,000 paper account, and a $500 account.
Oh, yeah, it's night and day. And I love what you said. Sometimes people just need to, feel the pain. Or do you remember, what did you say exactly? That was a great quote. But sometimes people just need to kind of feel the pain in order to realize that, okay, wow, this is no joke. There's more to it. And, it's so true, because right now at the time of this recording, I have kind of a little project in the room. And I think this person is my project because they are an Ohio State student, I believe, right now. And that's where I graduated from. And this person is doing exactly what Parker's been talking about. They're just, they think they got it figured out. They think they're good. And it's just like, and I've told this person, I'm like, I think you're just, and I get it. He's a college kid. I was a college kid once. I understand the ego of college kids, especially when you're a guy. Like, it's like, no, dude, get away from me, old man. But it's what Parker just said. It's like, unfortunately, I think this guy's going to have to go down, the Parker route of, he's just going to have to get kicked in the teeth and feel the pain in order to really realize that, yeah, things aren't quite as smooth as what I think they may be in terms of, my strategy and all that sort of stuff. So yeah, it's.
I've heard another quote, or actually around the market. This gentleman said that trading with or not practicing your trading or not having a plan is like paying part of your tuition. Because there's guys that are experienced with the market that are just going to eat you alive if you're not well prepared.
Yeah, I mean, we get the thing, and we're totally firm believers that there is tuition that's going to be paid to the market, whether you're new and you've trained or whether you're untrained and new to the market. The same is true because, errors are going to happen. You're new to the market. You're going to have to see how you react to things. But at the same time, just like you said, I want to circle back a little bit. And Clay, I think you'll agree with me when Parker was talking about kind of using stops. It's almost like Parker, he reduced his expenses. He's using stop losses. He had to save up money again to fund his account. It's almost like he's treating it like a business, like he wants to have that, suite with the panoramic view. Would you agree with that?
Yeah, it was. He's in full businessman mode when it comes to all that stuff. But I mean, that brings up another good point. So here's a rabbit hole too. You can do all that stuff. You can be treating everything like a or you can be treating everything like not like a rabbit hole. You can be treating everything like a business and doing everything right. But then you could just be doing just one thing not quite right, and your whole business kind of just sucks and it goes down the tubes. And for Parker, it was, that stop loss. He wasn't respecting it. But he was doing everything else right. He was paper trading. He was saving up. He was being patient. He was, he was running things, like Chess said, as a business. But a lot of times, all it takes is a few little holes in a strategy, and a boat can sink. But, as Parker has told us, his little kind of thing that really turned his business model around was just something as simple as, respecting a stop loss. So did you have like a big loss that finally kicked you in the teeth that made you decide I'm going to officially start respecting this, or was it just kind of a slow transition that brought you to the point of, I need to respect this stop loss. I need to, realize that it's there for a purpose.
Absolutely. Yeah. So I actually among the time that I lost that initial $5,000 gain on the marijuana stocks, the penny stocks, and all that. That's really what kind of set me back and made me take a step back and think about my mindset and really analyze what was doing wrong with my trades. Adding too much emotion and not respecting that stop loss.
Oh, I'm sorry. Go ahead.
Yeah. So paper trading really did help me practice, respecting it, because you really have to get used to it. If you've never taken a stop loss in a paper trade, you're probably not going to be taking one in a regular trade, with your real money.
No, fully agree, because taking a stop loss in paper money should be extremely easy because the money's not real. So, okay, whatever. I'm not really losing any real money. But if you can't even do that when the money's not real, then there's no way you're going to be able to do it when the money is real and you're thinking, oh, it'll come back because I can't lose any money, or it'll bounce. It's just going to be a disaster. So good point there, Parker. If you can't take a stop loss in paper trading, that is not a good sign at all for going live. And is it fair to say that you spent that 8 months when you're out of the market? Was your mind still on the market, though? Was that when a lot of this reflection was going on? Like, what kind of went wrong? Or did you just totally get away from the market for that 8 months?
Yeah, pretty much that time I just got away from the market, changed my lifestyle a little. Didn't really chart. I wasn't really drawing up charts like I really actually I didn't really used to, but I just wasn't even looking at the market, honestly. I would usually check it on my phone or check Yahoo Finance, check Investors Hub, stuff like that. But now I just kind of took a break from it, or then I had just taken a break from it altogether.
Gotcha.
And I think that really helped me too, because it kind of removed my my ego from the losses that I just had. I wasn't getting any revenge trading. I wasn't going to be doing any revenge trading by going back to the market. And I think that's one thing that really helped me emphasize emotion again, because it's such an important, it's probably the most important, honestly, thing to try to master when you're trading. Because if you have no emotion in your trade, then there's no way that you can ever lose, because you're going to have that perfect stop loss already set in your account.
And it won't affect you because it's set at a good level, and it's not going to be, like you said, 25% of your account where 4 trades can wipe you out, under 2 months or something. But exactly. I think, I just want to tie into that because I think it's such an important part as well, is that was probably good for you to kind of take that big gap and not be strictly focused on it, because I'm almost nervous that there's a lot of people who say they blow up an account with penny stocks and may have had previous success like you turning $800 into $5,000. If you don't take a break and kind of step back and look at it, you might get the impression that, oh, it's okay, I'm going to save up money again, and then I'm going to, they're going to start going all in on trades again, and they're just going to keep repeating the same mistakes over and over because they kind of had a taste of that, those massive gains. You, on the other hand, you took a step back, you took a break from the market in general, and I'm a firm believer in that we only have so much mental capital that we can expend. People get burned out really easily, and don't get me wrong. we kind of hit on this in almost every podcast now, that the more boring your trading is, generally the better you're doing. And kind of just like you said, if you're emotionless, everything is kind of set in advance, and the trade either works or it doesn't. It's just as simple as that. And it's not as taxing as, when you got 50% of my account is on the line, and if I get stopped out, I lost half of it, and I'm going to have to double down on this next one. And, that kind of pressure can easily make you slip up and make kind of the most ridiculous mistakes.
I definitely agree.
Yeah, if you are having fun trading, you're not doing it right, because there's some sort of adrenaline rush that's creating this fun. And if you're trading in a way that creates adrenaline, that's not good. It needs to be, it is what it is. And like Parker said, you put in a stop loss, and you may not win in the sense of making money, but you're going to win in the long-term game of controlling risk, making sure that loss doesn't spin out of control. So in that sense, I'm pretty sure that's what Parker meant when he said you can never lose when you got a stop loss in. Sure, you can lose monetarily, but over the long haul, if you keep your risk minimized and not let your winners work, everything's going to work out for you. But on the note of stop losses, we've already you've told us when you fixed that and started to respect them, things turned around. But a stop loss is just, only a small function. I mean, what else were you starting to do that changed? Because obviously you still got to get good entry points, because if you're getting crappy entry points, then all your stop losses are always going to get hit. But, other than, respecting your stop loss, what other little tweaks did you kind of discover during the paper trading that you noticed you really started to help you out?
Yeah, with the paper trading, I was actually religiously making sure I was prepared for every single trade I would get in. So if the day before, or at least, I hadn't drawn up every single time frame, if I find a chart on the day of, if I hadn't already done that, then I would not enter the trade at all, no matter what. So if somebody even alerted in the chat room, or, if my friend texts me, something, like that, see it on the news, and I'm not ready for it the day before, then I wouldn't even enter the trade. So being prepared is obviously the best thing you can do, but that's what really sent me over the edge. And also my charting, that was really a big milestone for me. Going with TD Ameritrade and Thinkorswim, I just became obsessed with the platform. I learned everything there was to know about it, and I became really fluid in it, and just basically became a religious chart drawer. Just kind of make it a little art form. That's kind of what it is at some points.
No, it definitely is. So just so I understand, your definition of prepared is, we'll just take Apple. So if you were not looking at Apple and doing your chart analysis on it the day before, if Apple were to come up in the chat room, or come up, like you said, a text from your friend, it doesn't matter. You're not going to trade Apple that day because you didn't do anything with it but the previous day. Is that what you're saying by, prepared?
Absolutely, yeah. And if I did really like the trade, I would have to make sure that I would draw up every time frame from the 10-year weekly down to the 1 day, 1 minute before I entered it. And I made sure I knew every support and resistance. And then if it was still a good decision, then I would go ahead and enter.
Okay, so it's
I
more
limited
so
myself to those two main rules. But at first I originally said I'm not going to place any trades at all if I'm not already prepared the day before. Then I kind of slowly transitioned into, okay, maybe I can take alerts from the chat room and try to make money off it if I'm drawing up all the time frames.
And that actually makes perfect sense, because at the beginning, your chart vision, your chart efficiency is going to be a little slower. You can't, whip out all the trend lines and throw them up there super fast. So yeah, that would make sense. I don't have the time because I can't do it, on the spur of the moment. But as you get better, you are going to be able to do it on the spur of the moment. But your definition of prepared, essentially, you want to have all time frames mapped out before you take a trade, whether that's the day before or the day of. Regardless, all that needs to be done before you take a trade. Is that a fair summation of how you're defining you need to be prepared?
Absolutely.
Okay. So, but Ches, I thought we just don't you just get a text alert on your phone that says hot stock pick buy here, and then, or you can just sign up for an email service? I thought that's how what is all this about having to be prepared and mapping out supports and resistance levels? This sounds a little actual work, or what's going on?
Don't say that work word. Yeah, we're not here for working. We're not here to take this seriously. But it's kind of funny that you mentioned that, Clay, because I've purged myself of all the penny stock newsletter emails that I had from 3-4 years ago, and I actually just got an email last night about saying secret penny picks or something text this. It's like a 5-digit number, and I was just like, I can't believe that this is a thing, and that people actually think that it's as simple as that. Is that some service is going to text me, and while I'm sitting at work or something, I'll just go to E-Trade and buy it blindly, and it's just that's not how you succeed in this industry or in this. If you want to treat it like a business, I don't think the CEO of Google or Amazon launch their service by kicking back and using alerts and things like that to kind of run their business. They're probably pretty active in kind of thinking about it and taking an interest in what they do. So yeah, it is a little bit of work, and for those of you out there that are lazy, you're really not going to make the cut. It's just as sad as that.
Yeah. You'll make somebody else rich though, because you're going to pay for those hot stock picks, and then so you'll make somebody else rich. But anyways, that's besides the point. So Parker, we've determined that you treat it like a business. We now know what you mean by prepared. And so right now, actually, what kind of gave you that final boost to go, you know what, can I do this full time? So of course, thoughts are going to come first. Yeah, I think full time. But what finally happened that was kind of that straw that broke the camel's back that made you take the plunge into full-time trading? Was it a certain amount? Was it a certain, consistency level? What pushed you over that edge?
Yeah, so I realized that. So I actually started logging all my trades on the paper trading, just to see where I would be at in terms of how much money I'm making on every trade. How many wins and losers I was getting, and with that $5,000 I was trading with in my paper account, I was making like $500 to $700 a week on average. A couple weeks I made $1,000, and I was never below like $350. So I figured I could support myself, being a college student. I don't really have to have that much income. I could actually support myself doing this. That's enough for me to pay for my expenses. And if I was doing valet, a couple of days a week also, that would really enable me to possibly make this my job. So I started doing both because I realized that, this could actually be my full-time job. And so when I was doing both, I did that for about 6 months, and then I put a little bit more money in my account, and ever since then I haven't stopped. I actually quit my valet job in May, and that was my main goal, was to be able to be a full-time trader. But basically the real way I did that was by logging my trades and paper trading. I was really using the exact amount that I had that I had thought of that I was going to put in my account, and it worked out. So that's kind of how I transitioned.
Now, I really want to emphasize saying I got to take this, Clay, because this is very,
I don't
very,
know,
very
Chaz,
important.
we might come to. Let's see. This will be a good test for us. Let's see if you're going to say what I'm going to say. If not,
okay,
that's fine, because that means I get to talk next. So go for it.
We've seen people go full time in the past, and that's going to include myself. But I want to make sure the listeners really listen to what Parker just said, in the sense of he didn't just say, oh, I'm making enough trading, screw this valet job, screw any other source of income. I'm just going to make it big in trading and not worry about the rest of it. He transitioned and he used two sources of income. One was his trading income, and two is the stable valet income that he knows he always is going to have coming in just by working a couple days a week. He didn't put all of the pressure on his shoulders immediately, which, for me personally, when I quit my job, I just went straight to trading. The pressure was huge. I actually had to go and get a part-time job and kind of do stuff on the side just to put my mind at rest. So it's definitely kind of transition, and Parker's just a living proof of that he did valet while trading, and now as of 3 months ago, he's literally living on his trading income. So it's totally possible, but I would highly recommend you make it a transition period.
Yeah, screw you, Ches, for taking my point. So I got to think of something else. But the other thing we can learn from this is, I get the impression a lot that if you were to tell somebody, yeah, I'm a full-time trader, that means like, okay, so that's the only thing you do? Well, no, I got a part-time. No, embrace that. Be like, no, I want to be a full-time trader. I trade a lot, but I do, mow lawns. I do deliver pizzas at night. Sean, a member, she works as a bartender as a part-time job. And now we have Parker, who did valet services. So there's nothing wrong. You don't need to go cold turkey and be like, well, I'm a full-time trader. And, don't let your pride and ego get in the way. work that other, part-time job, I promise it makes things so much easier. And Parker, I mean, I'm not going to speak for you. Did having that, extra set of income, did that kind of put your mind at ease? Could you imagine if you just went cold turkey? I think things would have turned out a whole lot different just because of all that mental stress.
Oh, absolutely, 100%. If I only had the one source of income just starting out, there's no telling, what I would have been trading with, because my emotions would have been added to the trade. If I only have $6,000 to my name and I'm trading, a higher percentage of my account, I'm really taking a big loss on my net worth if I have a losing trade. So I made sure to stick with my rules, and I also made sure that I was stable enough, with valet savings to make that transition.
Yeah, and there's I've done a video on this too, about, is trading a good idea to get out of debt? And that's like the worst thing you can do to get out of debt, because think about this logic. Bill shows up in mail, you're in debt, you owe $500. Oh crap, I need to pay this bill. Let's go try to make money out of this money that I could use to just pay it, but you're going to be forcing trades, you're going to be taking stupid trades because you are going to be trying to, I got to pay for something. But in Parker's case, when you have a valet job, so let's just say Parker did have a bill for debt that showed up. At least he's got the peace of mind that, all right, I don't need to make money from this trading in order to pay that bill. I'll just use the valet job and pay that bill. And just to kind of summarize this whole rabbit hole, which has been a good one, by no means are any of us saying that, full-time trading has to be like full-time. No, you can be kind of a quasi full-timer where you're trading a whole lot, but you also have, some sort of part-time job, maybe a couple part-time jobs. I mean, the market closes. I have great news for many of you out here. The market closes at 4 p.m. Eastern time. So if you're in, Pacific time zone or Mountain time zone, guess what? You got all kinds of time left in the rest of your day to work like another job, maybe even 2 part-time jobs. I mean, it's kind of us on the East Coast that get screwed, but even then, we're done at 4. I mean, 4 till maybe. Clay, but I want to watch Game of Thrones at night. Well, I don't know. How bad do you want it? There's plenty of time in the day, so that's just not an excuse. I don't have time for a job. Are you sure? How long is the market open for? 6.5 hours? That's right. Yeah. How many hours are in a day? 24. I don't know. To me, I don't think you want it bad enough. Clearly, Parker. Okay, I'm ranting right now. So poor Game of Thrones. I'm always throwing in my videos. I guess that's what happens.
You do throw it under the bus a lot.
Yeah, but that's like the epitome of things. I want to be a trader, but I don't want to, have to actually save up money. I'd rather watch, pay whatever HBO chart. Anyways, I'm getting way off topic. So Parker, you're full time now. What actually are you trading? Are you trading stocks straight up? Are you trading options? Fill us in on the actual instruments that you're using to trade.
Yeah, absolutely. So a few years ago, I took a class on derivatives, and I actually noticed that a lot of people were trading options in the chat room when I had come back. So I kind of started researching options, and that was after I had learned, about the mathematic part behind them, all the deltas and everything in school. So I realized that you could actually accumulate really high returns in options, similar to penny stocks in volatility. So I actually started trading those. And that's what I trade now is options pretty much the whole time. Sometimes I'll go for, like bio stocks that are getting run up, and I'll just short the actual stock. But pretty much right now I just trade options.
And it's a great use of capital. It's just it has inherently built-in leverage for it, and you can definitely kind of we'll link in the show notes penny stocks on steroids. And the nice thing about them is that generally most of them are much more liquid than a lot of these crummy penny stocks, at least that have been in the past. But what if I was to kind of come over and look at your screen? I mean, I see you post up charts all the time. What would you say is your favorite strategy? What exactly do you have on your chart as far as indicators or moving averages? What is your chart, and what does your strategy entail?
Okay, cool. Now you're getting me all excited.
Good.
So pretty much on charts, I think that the most important thing you can remember is you really need to look at that long time frame. You really need to go, to that weekly 10-year chart to see where things are sitting at, because you never know what kind of big moves could come. If you're sitting around 52-week high with, earnings, there can be a significant move in either direction. So you have to be ready for that. And if you look at a year chart, you're not getting as much information as you need. If you think about it, the most important prices are the closing prices, because that's what most algorithms use in their trading, is the closing price. So if you're going on a 1-year daily chart, you only have 365 data points if you're only considering closing prices. So when you come out to a 10-year chart and you start from that and then draw your way in closer to maybe 1 year and then 60-minute, that's really going to give you an advantage, because you're going to see where things are sitting at, on an overall perspective, and combined with your current knowledge of the closer time frame.
Now, are you swing trading? Are you day trading? How long are you in the average trade?
Exactly. So if I really like a setup, I will actually accumulate shares as it creates its base, or the base being on a particular up or down expected move. So I'm actually day trading for the most part, but there's stocks like, for example, Twitter right now. I've been accumulating shares for about the past 3 days on options, contracts, I should say, and it's been staying within my lines and my rules, support resistances. So I've been accumulating in hopes of a good up move. I keep increasing my stop loss as the stock goes up, and this is really going to limit my losses in the case of a particular down move. So right now I'm accumulating shares of Twitter. I've accumulated
contracts of
contracts.
Twitter, right?
Yeah, I'm sorry,
Okay.
contracts of Twitter. I've also been accumulating contracts of AWK, American Waterworks, is a utility company.
Oh yeah, they're in my
In the down
retirement.
move. Yeah, they've been actually kind of dumping off lately, so I had accumulated for that. And I try to for the most part swing trade and accumulate shares. But if there's a day trading position or opportunity that I see, for example, a company just had earnings and they're just having a strong day or a really weak day, then I'll look for opportunities there, just to make a quick 5-minute profit, or 2-hour profit, something like that, or sometimes 5 minutes, in a lot of cases actually. So I do day trade and I do swing trade, but I definitely prefer swing trading, because you can leverage your trades and you can plan them out among weekly and daily time frames, which are really important to me, I think.
Yeah, and that's absolutely as a swing trader. And I asked that just to also provide a point for, well, first off, for you listeners, by the time this airs, this is Twitter and American Waterworks. That's not like, don't go and start accumulating. Hey, you're going to be super, super late. So just keep that in mind, that by the time you hear this, that trade has been a long gone in the past. And shame on you anyways if you're getting your trade ideas from strangers on a podcast that you're listening to. Go learn how to fish on your own. But anyways, second part is, the big point is swing trading. Yeah, I fully agree. Go back, look at the weekly. I mean, look at the big picture. But if you're doing some sort of little miniature day trade, I'm assuming would you agree with me that, going back and looking what happened 8 years ago for a 5-10 minute trade, you're looking just more so at the near term time frames. Is that accurate? Or
Absolutely, yes.
Okay. So for a day trade, you're not going back
correct.
15. Gotcha.
Yeah, sure. So sorry, I'll elaborate on that. So on a day trade, I really just pull up the daily chart, check it, draw up a couple lines if I see there are major lines that have been broken. And then I try to do a daily and then a 30-minute and a 5-minute as fast as I can. If it's like a really good setup in the morning, like before 7 o'clock, I try to draw 3 or 4 time frames, because I think that's plenty. If you have all your lines drawn out on those lines, you're usually good if you're just going to be in and out in a few minutes time for a day trade. So I don't really go all the way out to a 10-year chart when I'm day trading, only swing trading.
And that makes sense, especially, we're all about top-down, analysis and kind of looking from the larger time frames down. But at the same time, if you're trying to trade something on the 1-minute chart, generally you're not going to need to look all the way 10 years back for kind of data to kind of solidify that. So to just kind of echo Parker, it's definitely absolutely imperative in swing trading, especially. But at the same time, it's still important in day trading, but just to kind of a smaller degree. But what do you think is a personality trait that successful traders generally need to kind of have? What if you're talking to somebody who's brand new trading, not even involved in trading yet, what do you kind of think they need to have, maybe mentally before they even kind of hop in?
So basically, I think mentally you probably have to be ready to lose a couple dollars. You got to be okay with taking a loss. That's the biggest thing when it comes to trading. You're not going to win every trade. Nobody ever wins every trade. You're not going to come in here, and win 18 gold medals your first Olympics. It's just not going to happen. I'm pretty sure Michael Phelps didn't do that in his first Olympics. But anyways, yeah, you just got to be okay with taking a loss. That it's not a big deal. Everybody takes a loss. As long as you limit that loss, you're going to be fine.
Yeah,
and I think that's the biggest thing is the battle with your ego. Your ego doesn't want you to take a loss, but when you remove that ego and just realize, hey, I need to make an executive business decision here with my investment, then that's really going to help you.
Yeah, and I mean, I understand what you're saying, but making analogies to sports and trading, I mean, I've done it before, but it's not really good when you think about it. Because in sports, yeah, the attitude you should have is, we're going to win if it's a team sport, or I'm going to win if it's an individual.
Absolutely.
I'm going to win. We're going to win. Don't give up. Never surrender. And trading, it's almost kind of for like little wimps. Like as a trader, you got to be a wimp. Be like, whoops, I was wrong. Okay, I'm out of here. And as bad as that sounds compared to the never give up, never surrender, blah, that's just not what trading is. That's the whole ego thing. And that's why trading is hard, because like you said, Parker, you got to be ready to lose some money. Or translation, you got to be ready to admit, hey, I was wrong. And you got to be able to blame yourself that you made the decision that was wrong, not, some external force. And, we're just not wired like that. Who wants to admit that they're wrong? I hate admitting that I'm wrong. But then you put on top of that, being wrong there's one thing to be wrong of, I think I think team X is going to beat team Y, and then team Y wins. Well, all right, whatever. But it's a whole nother thing to have to admit that you're wrong, and then also it costs you to lose money. And that's a very hard, emotional personality dynamic to overcome. So, yeah, I would say that's probably about the best answer you could give in terms of, what personality trait is. You better be ready to lose some money, or, in other words, you better be able to admit and be ready to admit that you're wrong, because it's not like the sports world or really anything where it's work as hard as you can, win, don't give up. Yeah, in trading, you got to wave the white flag quite a bit. And a lot of time, and most times, the sooner you wave that white flag and just get out of the trade, the better for the overall plan of things. So looking at the time here, I don't know where the time has gone. It's kind of flown by, but we need to, Ches, can I lend him your time machine?
You certainly can.
All right. So Ches has a time machine. And if we were to, we're going to lend this to you. So if you could go back in time to when you were first getting started, what would be that one bit of advice that you'd give yourself?
You know what? I would say paper trade first. That's probably the two words I would say. Make sure that that you paper trade before you put any of your real money in, and mimic the paper trading to be exactly as if it were your real money, And if you do that and you're okay with it for a long enough time, then you can go ahead and put some money in the stock market. But
so
that,
you wouldn't recommend that people just accumulate positions in penny stocks over a year based on a roommate's tip? You wouldn't recommend that?
Absolutely not. No, I would definitely not.
Just like you said, obviously that was something you had to go through in your journey. So that's just kind of a part of it. And everybody's going to kind of go through their own ups and downs in their trading journey. But it is just important to kind of, practice exactly how you'll be trading live, or you're just kind of setting yourself up for failure. But Clay's, pretty much the most important question Clay always has, and we'll determine if we even air this podcast, is what is your favorite movie?
Benchwarmers is my favorite movie.
Benchwarmers?
Benchwarmers.
Who's in that? What year did this movie even come out?
You haven't seen Benchwarmers?
What year did it come out?
The only reason I love this movie is because of Nick Swartzen's character. I'm a big Nick Swartzen fan.
Should I know who Nick Swartzen is, Chess? Because I don't.
Whenever I get this question of what my favorite movie is, I try and switch it up every time because there's so many good movies out there. And if I just said one, that would just be demeaning to one specific director. So right now, I think Benchwarmers. This guy, Nick Swartzen, plays his character, who I think is like the epitome of the young American community right now. And he's like scared of the sun. And he like eats sunscreen and stuff like that. But yeah, Benchwarmers and probably Step Brothers is my other favorite comedy.
Did we just become best friends?
Exactly. I love it, man. It's hilarious. And especially because I have a little brother, so I think that's why I resonate with it so much, and the kind of things the mannerisms they did in the movie are just
you guys
hilarious.
do like karate and stuff up in your room and all that sort of good
yeah.
stuff. Yeah,
karate in the garage. Yeah.
yeah. What about food? What do you like to eat? And then what do you follow that up with? Dessert.
Yeah, absolutely. Favorite food? Actually, I recently gave up meat, so I've only been like eating fish for meat. But I really like for dessert. Oh, I love dessert. Brownies and ice cream. That's my absolute favorite, hands down.
That's pure. I mean, right next to apple pie. That's about as America as it gets. So.
It's so good. That's probably one of the apple pie. That's probably the only reasons I would ever consider eating McDonald's is for that sugary apple pie.
Yep. Yeah. Now, Parker, what do you do outside of kind of trading the market for kind of fun and hobbies?
Yeah. So actually, when I was in school, I was in a fraternity, Pi Kappa Alpha, and it was through there. It was actually through one of my friends through Pike who I learned trading from, one of my roommates, and that's kind of what I did with my free time. Just kind of do different frat boy stuff, chugging beers and thumb gunning, shotgunning, all that type of stuff. The typical frat lifestyle that you could imagine.
So you have a few wild stories, I'm sure, which we will not talk about in here because we try to keep this somewhat of a family-friendly show. But out of this curiosity, what was the fanciest car you ever drove during your valet days?
Oh yeah, okay, yeah, I actually got this car. It's kind of funny because when I was working there, I actually worked at 2 different places for like 4 years, and my name is obviously Parker, so people would come into the valet and be like, oh my gosh, your name's Parker. And I'm like, okay, yeah, you okay now? You understand that's my name?
You should say good one. I haven't heard that before.
Never heard that. Yeah. But the best car, I don't know, name a car.
Okay, so you've driven pretty much. So it's more of a question of what haven't you driven?
Yeah, I think that's a better question actually.
Have you driven?
Okay, what was your favorite one to drive?
You know what? I would say that my favorite car. Oh, these newer Porsches, you guys, they're just ridiculous. I forget if it's like the newer turbo. I forget. I think it's like a 911 turbo. It's something like a 911.
Something super expensive.
Something really expensive. I actually drove a Bugatti once, Mayweather's Bugatti.
Nice. And Parker, I'm sure you and kind of your old cohort are probably a little disappointed that some of the newer cars have a valet mode, so you can't go completely ripping it through the parking lot. I did get a kick out of, I think it was a Tesla or something. There was a video of some valet guy trying to rip it around, and it wouldn't kind of go too fast. But yeah, there's still plenty of fast cars out there that people aren't trying to keep valets from having a little bit of fun in. But what are 3 words you believe should be associated with successful trading?
Discipline, and the next 2 words would be money management.
Oh, nice.
For sure.
Nice.
Yeah.
I think that's the first time anybody's ever said money management. Discipline, money management. Yeah.
Absolutely. You can accumulate, money trading. You can make money trading, but sometimes when you see your account get to a certain size, you start getting trigger happy, and it's because you feel emotion to that number value in your account. So actually, what I started doing a while ago was trying to take away money. Even if I didn't need to put any in my checking, just keep taking out money as I was making money in my account. So definitely, discipline and what was the other one I said?
Money management.
Yeah, money management. Yeah, those are two of the really 3 words for sure.
Yeah, no, that makes a whole lot of sense. Well, Parker, it's been a good time. Definitely congrats on going full time, and thank you for hanging out with us this afternoon.
Thanks, guys. Appreciate it. It's been really fun.
For you listeners out there, would like to make a few final requests. If you're listening on the website, leave us a comment, click that share button. Those little clicks go a long way. If you're listening on iTunes or any of the other podcast players, subscribe to the podcast itself. And especially on iTunes, if you leave us a rating, that really just helps to get our the word out there, and just lets us know that we're not kind of just foolishly spending our time putting these together. So little ratings on iTunes go a whole long way. And then finally, for those on YouTube that have been watching and listening, check out the channel as a whole. A lot of other different videos, live trade videos, chart analysis videos, and all sorts of other different pieces of content. So check out the channel, and hopefully you decide to subscribe, so you can be kept up to date on not only when new podcasts are released, but when the other bits of content are also released. So thanks again to Parker. Thanks again to all of you listeners. We will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Claytrader community, including the trading team, premium training, and more, visit claytrader.com.